Hello and welcome to this edition of Biz China on CCTV International. I'm Annie Fu in Beijing. We've got 30 minutes of the latest business and financial news just ahead. In our top story, figures just released by the National Bureau of Statistics show China's GDP growth hit nearly 8% in the second quarter over a year ago. Now, officials say the economic situation continues to improve thanks to the government stimulus measures. Liu Ying reports.
MBS spokesman Li Xiaochao announced China's GDP growth rebounded strongly in the second quarter to reach 7.9%. That's a big gain of 1.8 percentage points from the first quarter. Li Xiaochao says this is a good sign of economic recovery.
Thanks to the bunch of plans we implemented to deal with the international financial crisis, active factors in our economic running have continuously increased, and the national economy is stabilizing and begin to recover.
MBS statistics show industrial output accelerated to 9% in the second quarter from a year ago. This compared to 5% in the first quarter. Decline in industrial profit has also narrowed. Fixed asset investment surged over a third in the first half. Investment in infrastructure such as railway and road surged an even more impressive 57%. The pickup has partly offset the decline in export, which contracted just under a quarter in the first half. The consumer price index fell in June by 1.7% and the producer price index by 7.8%. In the first half, the falls were 1.1% and 5.9%. Li Xiaochao says despite the steady improvement, the government's job is not done.
The basis for the economic recovery is not yet very solid. The trend is not yet stable. Uncertain and unstable factors still exist in the process of the economic recovery.
Li Xiaochao says China will continue to adopt an active fiscal policy and a relatively relaxed monetary policy. The government also plans to foster new growth engines and improve the quality of economic recovery. The rebound of China's GDP growth rate shows that the economic recovery is on track. The challenge now is to ensure that momentum strengthens in the second half. That's essential for achieving a full and sustainable recovery. Liu Ying, CCTV, Beijing.
Now, for more analysis on today's economic figures, joining us in the studio is Professor Huo Deming from Peking University. Welcome to our studio, Professor. Now, a lot of the figures that were released today seem to point to accelerated growth in the Chinese economy. What's your take on the figures that were released today?
Well, China's economy is definitely on a recovery path, but I call it an engineered recovery, which means a lot of policy interventions there. And so in terms of policy intervention, I think ordinarily people would forecast it at 7% as a normal growth rate, but now we are close to 8%. So my best guess is that there's 1% of policy engineering there.
Okay. Well, what do you think then of this 7.9% GDP growth rate that we saw today? It was definitely engineered, but was it higher, lower than?
Well, it's higher than our expectation, and I think generally speaking it's a good sign, but we don't want to use the drugs on a too strong basis, so that ordinarily our health needs a normal recovery, not by outside exogenous forces.
Okay. I think China has set the goal of 8% GDP growth for this year. Do you think it's on track for that? And is there anything that could possibly derail this?
I think the target of 8% growth is reachable. And I don't want to say 100% for sure, but I think there are very little doubt that when Chinese government set to do that, we should trust it.
Okay. Well, I mean, some people have talked about the rebound kind of being in a V shape, but there's also been some concerns that it might be actually decreasing, that the shape might actually be more of a W. What do you think? Is V, W, or whatever shape you want? What do you think
to answer that kind of question.
I know.
But you see, in China, the policy intervention is extremely important. So whenever you see a forecast a U-shaped recovery, it might come up with some government intervention so that the U becomes a little W. So that's the tricky part. I mean, what we have seen now is that China is on a recovery path. So let the market do its best. And I don't want more policy interventions.
Okay, so not more policy interventions.
Definitely.
But if the government were to kind of take some further steps, what do you think, what would your forecast be in terms of what steps you think they might be taking now?
Okay, what's happening now is that GDP growth rate is on the right track. It is for the 8% standard. So what people are concerning about is inflation and then the employment. It looks like what we have inflation is mild, or you probably have deflation, according to the recent number we just see. So for next 3 months, I don't see any strong inflation indications. So I would guess the moderate fiscal policy and monetary policy will be pursued. And the employment part is really the tricky part, because that involves a massive amount of migrant workers, and that's more difficult to handle. And if those migrant workers originally work in a trade, external department, they want to shift into the internal economy, that's a tough job.
Right. Now let's talk about external and internal. External demand right now still very weak. Exports, I think, still showed a decrease for June. How do you think this will affect China's growth? Is, with the rest of the world getting weaker or not necessarily showing such strong signs of growth, is it possible?
Well, the rest of the world is definitely still on the weak side. So there's no doubt that the rest of the world is not going to help China in terms of recovery. However, when I say engineered recovery, which I means that government intervention is always there. Now, at this time, the government is trying to switch from the external economy to the internal economy, and that's the most difficult one. And I would say that when Chinese government is focusing on inflation and employment, and those two issues, whenever there's no problems arising from those two aspects, then whatever they're doing now will be continued. So we should see a very good recovery numbers in terms of the third quarter, but that'd be more interesting in the fourth quarter.
Okay. So do you think this domestic consumption, or this trend towards domestic consumption, you think it'll be strong enough to propel China's GDP growth? And if you do think it will be able to, do you think that this China's own growth will be able to help with the rest of the world's recovery? I think that's what everyone is hoping for, right?
Okay. In terms of domestic consumption, I think there are some signs showing the recovery, but in terms of CPI, it's still on a negative number. So I'm not going to make a too long forecast. I say we just watch and see, and see how the real business is being performed. In a sense that the pensions, the medicals, educations, all those things need to be resolved. About the rest of the world, I think everybody's looking at China, since we all have 8%, near 8% growth. Will that be able to help the rest of the world? I think yes, and China has to liberate itself, taking a lot of imports. Remember that imports declines much more than our export.
Right. Well, let's take a look at the second half of this year, the first half is already over. And this week's figures will be very important in helping the government assess the current situation and decide on policies for the second half of the year, as we've been talking about. And this includes fiscal and monetary policy. Now, China's lending in the first half hit a record 7.3 trillion yuan, and that already exceeds the whole year target of 5 trillion yuan. Now, before we continue our discussion, let's take a short look at a short report on this first.